Hello, traders. Today's topic is going to be market uncertainty and how we mitigate risk. Trump has lots of policies that he's going to be instituting. We've got earnings season heating up. We have FOMC statement that took place yesterday. We've got economic releases this week. Lots and lots of news. So how do we trade when the market could move higher or lower? That's something that I addressed when I did my Sunday video, and I showed you a JPM straddle. That trade actually worked out really nice. So I'm going to review that very quickly, and then we're going to take a look for a new trade this week. We'll do some market analysis. I'll show you how the market is setting up. I'm going to try and keep these videos shorter, so please make sure to subscribe to the YouTube channel and turn on your notifications, because I'm not sure when I'll have a chance to do these recordings. If you've got your notifications on, you're going to know when they're posted, and I always like to include a trade. So JPM, the backdrop was that I'd gone back and I had taken a look at the last four FOMC statements. Bank stocks had made huge moves, and that set up well for this strategy because financial stocks typically have fairly low option implied volatilities. We also had a lot of market uncertainty coming into the week. So even if we got a big market move, there was a chance that bank stocks were going to participate in some of that volatility. Bank stocks had also recently reported earnings, so those option implied volatilities had collapsed after those announcements. So if we take a look, the stock was at $265 when I did the video on Sunday, and our objective was to buy the $265 straddle that expires tomorrow, January 31st, and to pay no more than $4.80 for it. I had mentioned to you that there was no need to rush into that trade. The longer you waited, odds are the cheaper that straddle was going to get. And so you should have been able to enter that trade for $4.30 or so, but I'll show you how I entered the trade. So we'll go into a 5-minute chart, and I'll show you the price action that I had on Tuesday. And we could see that the stock was really choppy. I mean, look at this, up and down and up and down. It's not going anywhere. So Tuesday morning, the market ran up a little bit higher, and then it sold off. And I could put that 5-minute chart up so that you can see what my thought process was. So on Tuesday, we had this little spike up in the market, and then the market was pulling back. Well, I thought this would probably be a good time for me to buy the put side. So I bought the 265 puts, and I paid $1.35 for them. And then if the stock pulled back with the market, my intention was to buy the calls, and that would allow me to leg into that spread effectively. I really wasn't predicting what the stock was going to do, just on the basis that it's been choppy. It ran up before, not before the open, but at the open. The market was pulling back. Okay, hey, market's pulling back. Buy your puts. Let the market pull back. The stock is probably going to pull back. When it does, buy your calls, leg into the spread. So as always, I also like to show you the chat room. And so this is the commentary from Tuesday morning at 8:44, which is 15 minutes into the open. I bought the 265 puts for $1.35, and then I'm simply waiting to buy the calls. And I was bidding very cheap, $1.65 for the 265 calls, because I didn't know how far the market would come in. And there I bought the 265 calls for $2.65 for a total of a $4 debit on that straddle. So what happened? Well, what happened was I've got this really nice trade on. The FOMC is going to be coming up, and the stock started to rally Tuesday, and it closed on its high, and at this point it was $2 and change in the money. So it's heading higher and my calls are starting to increase in value. So what I told chat members, because they're following along with the trade, I said, okay, well, Wednesday before the Fed, if I get a really nice pop in JP Morgan Chase stock, I am going to sell out of my calls, but I need to get at least $4 for those calls. If I can do that, then I've got a free put trade because $4 is what I paid for the entire straddle. Well, I held out because I like this price action in here, and I thought, well, because I had suggested $4.80 for the straddle, I at least want to get $4.80 for the calls. They traded as high as $5.50. So you were able to sell the entire straddle. If you bought it for $4.80, you were able to sell it easily for $6. So this was a really nice trade. And in doing so, you didn't even have to hold it over the FOMC statement. You could have pocketed a 25% return. Folks, if I can make a 25% return in a couple of days, I'm going to take it. Don't have any position risk at all. So what happened was I ended up selling the calls for $4.80, and then I just held the puts, waiting for the FOMC statement. Well, here's what happened next. Well, looky there. The stock pulled all the way back, and I was able to sell my puts for $1 and I think 25 cents. So I exited the straddle for more than $6. I paid $4 for it. I made 50% on that trade in really a day, and I didn't have to weather the FOMC statement. So that's just a really decent strategy to take a look ahead at a window where you should see some market volatility and to try and take advantage of that volatility. So that's exactly what I did. So what happened? What happened to the market? We had earnings announcements from Tesla, Microsoft, Meta. Yeehaw! We should get some really good movement because those stocks probably represent about 12% of the S&P 500, probably even higher than that. So we should have gotten some good movement off of that. We should have gotten some good movement off the FOMC statement. We should have gotten some decent movement off of our first look at Q4 GDP, which came out this morning. So we've got all these influences. What happened? We got a great big nothing burger. This is the reaction to the FOMC statement in here. Just a bunch of chop. Nothing. Fed basically came out and said, yeah, we're happy with where interest rates are right now. We don't really see any need to do anything. We're happy on the job front. We see inflation coming in. Economic activity is decent. So we're happy. We're happy with where rates are right now. And they probably aren't going to do anything until June. Well, the market had a very muted reaction to that news. Well, that's okay because we got mega cap earnings coming out after the close. Those are bound to drive the price action. Nothing. Between Tesla, Microsoft, and Meta, there was no net impact. Market really didn't budge much overnight. You can see how we had this opening run up and then a drop. So we've got Apple after the close today. Maybe that's going to spark some excitement. Let's zoom out and take a look at the overall market. We have been trapped in this horizontal trading range for about the last 3 months, and it spans from roughly 580 on the SPY up to about 605. I mean, that's been the range, and all we've done is chop in between that range, and we've done so on extremely light volume. Folks, there's nothing going on here. I think that might change. It might change with Apple. This morning we did get initial jobless claims came out. They were at 207,000. That actually bodes well for next Friday's jobs report. And I thought we were going to start seeing higher unemployment. But at least as far as the initial jobless claims numbers, We're not seeing it yet. GDP came out at 2.3%, 2.7% was expected. If you factor in inflation of 2.2%, on a real basis, GDP hasn't even grown, okay, 0.1%. Nothing. Europe came out with their GDP, and across the board, it was down slightly, like minus 0.1%. There is not a lot of growth going on in Europe, and that is on a nominal basis. That's not even considering on a real basis, they've got negative growth. So I'm not seeing where all this growth is going to come from, and I believe that the market is discounting a pretty important piece of news, and that is that Trump is going to raise tariffs. There was just a press conference yesterday where it was confirmed that yes, Trump still plans on increasing tariffs or hiking tariffs or implementing tariffs, 25% on Canada, 25% on Mexico, 10% on China, effective February 1st, which is Saturday. That's going to cause a great deal of uncertainty. And we've already seen China ban minerals, molybdenum, and all sorts of rare earth minerals that are exported to the U.S. They control about 90% of the supply. And these rare earth minerals are used in technology components. So they'd already put that ban in place last fall. Trade wars are going to start up. They've also canceled huge crop orders and huge energy orders. They've signed contracts with Brazil and with Qatar, and those are to the tune of $690 billion. So let the trade wars begin. Now, I don't know if the market is discounting the impact of the tariffs or if it simply doesn't believe that Trump is going to follow through with them. I believe that Trump is going to follow through with the tariffs. He does what he says he's going to do. Why wouldn't he move forward with it? And as recently as yesterday, yes, we're full steam ahead on the tariffs. Okay. So I think that when we come in Monday, the other thing to keep in mind is that this is the Chinese New Year. China's market has been closed, and when it reopens, especially if there are new tariffs being imposed, it could have a pretty dramatic impact. So I still think that we're not out of the woods as far as the news and uncertainty. And I sure would love to get some dang price movement here and some dang volume. But right now, as I see it, asset managers are not excited. They're not enthused by the market. They're also not fearful of the market. So that's when we get this choppy kind of price action. So how do I deal with this? Well, we had a couple of different methods available to us. One was to actually buy very cheap option implied volatility. Another way that we can approach this is to look for situations where the stock isn't going to move much, on the notion that the market stays in this horizontal trading range, but we need to make sure that we pick the right stock. So when I went through my searches and I looked at all the different stocks that were coming up, I found one that I really like. So this is going to be your trade of the day, and it is on Tesla, which reported earnings yesterday. So yesterday after the close, we had this nice gap up. And as far as Tesla is concerned, there's some excitement over their robo-taxi, and their car sales were a little bit soft. They do manufacture in the United States, so as far as the tariffs are concerned, I'm not overly worried about that because they do manufacture here in the US. So we'll go into the daily chart. We'll take a look at what Tesla's been doing. We have very nice horizontal support right here. We've got the 50-day moving average, horizontal support, and we have a VWAP-E well below this level. So what I'm going to be doing is I'm going to be selling an out-of-the-money bullish put spread. Again, I don't feel that Tesla is going to be impacted by any kind of tariff news should that materialize. It's also reported earnings, so the cat is out of the bag. And they've generally been accepted as decent. Everybody really likes the growth prospects for Tesla. So I am going to lean on that support level. I'm going to lean on the 50-day moving average. I'm going to lean on a VWAP-E. And the way that I'm going to do that is I'm going to initiate a Tesla bullish put spread. And there, I'm going to sell the February 14th expiration, Valentine's Day. I'm going to sell the $65 puts, and I'm going to buy the $60 puts. And I'm going to do that for a credit of $1. So, and you can see a couple of my JPM exits up there from yesterday as well. This is a fairly small trade. I'm only going to be doing 10 contracts. When I'm discussing my trades with the public, I do very small size because I don't want to be in the way of your trades. I don't want to be driving the market. So there's ample opportunity for you to be able to enter and exit these trades. I'm also looking for situations where you're going to have some pretty decent option liquidity. So that spread is going to expire in a little bit more than 2 weeks, and the stock is currently at 406. So it would have to drop roughly about $40 for that short strike price to come into play. It would have to take out the 50-day moving average. It would have to take out this horizontal support level, and it would have to test a VWAP-E. So we've got many layers of support for this trade, and I'm simply trying to take advantage of accelerated time premium decay. That's my plan, on the notion that Apple's going to come out regardless of how their earnings are. Even if the market sells off fairly substantially on Apple's news, we still have Google next week. We've got Amazon next week. We still have a fair number of earnings reports next week. We also have the jobs report coming out next week. That's going to be a big piece of information. But on the jobs front, initial jobless claims have been pretty steady. So the jobs report could actually come out and be pretty decent. So with all this news right now and all this risk, we've got uncertainty regarding Trump. How, as a professional trader, am I going to manage my risk? Well, I'm able to do it in a couple of different ways using options. One is to buy very, very cheap straddles or strangles, looking for that big move, and if it happens, those are going to explode. The other is to distance myself from the action and to find stocks that have really strong support that should not be impacted by that news. And again, Tesla's just announced earnings, so the cat's out of the bag. They've got production in the United States. There's excitement over robo-taxi. It's got multiple levels of support. So regardless of what the market does during the course of the next couple of weeks, I believe that that spread is going to be in really good shape. That's what I've got for you today. Thanks so much for watching. Make sure to subscribe to the YouTube channel and turn on your notifications so that when I do these videos, you're going to know and you'll be able to take advantage of the trade. Thank you. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.